Today we are going to chat with a 12-year veteran trader who's made over 8 figures in his career. He's going to take us through his evolution as a trader, the key strategies he likes to use, where he looks for an edge in the markets, and a deep dive into what it takes to improve that far into your trading journey. This episode is going to help every single aspiring trader out there. And if you want a full write-up of my personal takeaways from this lesson, I'll be releasing them in my Telegram soon. You can find a link to that in the description below. Joe, SC, welcome on another episode. Pleasure to have you.
Thanks for having me on.
Always a pleasure. Where did you start your trading journey? Because I mean, I think it's been 10 years for you now, probably just over. Could you give us a summary?
11 now. Hit
11, damn.
11 or 12. When I started at university, I was doing a maths degree. I just started learning from there. And straight out of university, I've been trading full time since. Started with FX and then indices. And then, I say more recently, but since 2017, crypto as well. So mainly traditional market background. I still do that, but now do crypto as well. That's the basic summary.
I actually never knew that you went straight into trading, nothing else.
Yeah, I was trading from university. Did quite well. Well, got lucky, but then full time since last year university, and ever since then trading. That's all I know.
And did you start from nothing, like very little money, and work your way up? What were you trading?
Yeah, nothing. I mean, $2,000.
$2,000.
Yeah, and from there just built it and just never look back.
So 12 years. Can I ask ballpark? Just give me figures where we've managed to go to, starting from $2,000.
I mean, I've had well, in the eights, put it that way.
In the 8 figures. Well, congratulations, man. That's a lot of hard work from 10, from 2K over 12 years to 8 figures. Congratulations.
But I mean, I worked certain places trading as well, so it wasn't just purely that. But yeah, purely trading wise, yes. But yeah, throughout my trading career, should I per say, it's built up to that. Yeah, so I spoke for myself now.
Oh, of course, man. I know you're always very modest with these things, and you have been in our past interviews. And anyone who wants to get deeper into your mindset can watch those. But what I'm really interested in right now is over the last 2 years, since we last spoke, you're from years 10 to 12 of your trading journey. How has your trading evolved? Like, to help guide you and get a bit specific with the question, is there anything you believed 2 years ago that you believe less now or don't believe at all? Or anything you weren't so sure about that you've just doubled, tripled out on? Does your trading keep evolving at this stage?
I think trading does keep evolving. That's certainly true. I think it's become more simplified, if anything. I mean, you're always learning. What I'd say I knew 2-3 years ago is nothing compared to what I know now. Maturity wise, I think I'm matured more. I think with your system, you're gonna know your system. There's only so much more. Obviously, you have to evolve the nitty gritty stuff as the conditions change, volatility changes, environments change. But I think my discipline has improved a lot more. Yeah, it's more discipline. I'm being more picky and evolving that exact same system, tweaking it up. I've become better at that. For example, say about a year or so ago, I was okay at bear markets. Those were my favorite conditions, but bear market rallies were my weakness. That's something I probably picked up about a year ago, year and a half. Really refine it. Not that I couldn't trade it, but I wasn't as good at it. That's really improved my trading, and I find I prefer those ones, bear market rally longs, rather than shorting. That's become one of my favorites. It's just quick, aggressive. The way I've got my system sort of really picks it up really quick. I think I made a lot from that, really. But yeah, that's probably my... I don't know, I've just been really excited about that. I know it sounds silly, but yeah. After all these years, now I learned that.
All these years, you get your kicks from bear market rallies now.
Yeah, I swear it just makes me laugh. And then it's being able to switch on the dime as well. Whereas before, it used to take me time. Now I'm a lot more quick at switching at key turning points or cutting quick. So little stuff that I overlooked before, I'm sort of like, it's making a lot of difference, making a big difference to me anyway.
Okay, so I'm going to try to dissect that a little bit. Bear market rallies, what makes you good at them now? Like, what did you do wrong before and what are you doing right now in identifying them?
I mean, from before, I used to catch a large chunk of a leg and then keep trying to short that. Eventually, especially in a bear market, the rips can be really aggressive compared to a bull market. squeeze out late shorts. So I'm sort of able to identify that a lot quicker now and to actually anticipate it. I'm not sure if you've seen some of my moves where I even longed Bitcoin from like 15, 16K, and then after 25K to 20K. Those type of moves, I'm starting to like see that a lot sooner than before, and it actually makes me it gives me more discipline in my shorting, whereas before I used to go really aggressive. Now I'm a bit more cautious where I don't give back, and I catch a decent part of the opposite leg as well, whereas it's mainly one side before. I'm not talking about range bound, that's different, but this is like aggressive swing moves really, even if it is counter trend. So sort of refine that a bit more.
Okay, so you're really good at identifying and catching the bear market rallies. I did see your catch from not just 16K, but several very, very accurate bear market catches. Almost like is this a lucky streak? How is he doing this? But but so someone who's listening to this and wants to get better at catching bear market rallies, what would you tell them?
That's a difficult one. I mean, first of all, you gotta be disciplined. Of them, it's taken me. Maybe a late learner, but it took me nearly 11 years to get to that stage. It's just key SR levels really. I mean, the way I do it is when I say I simplify it down, I actually zoom back out and say, okay, where was I before going wrong? So I start all the way back, and sometimes it's hard to go back to where you're going wrong. You don't want to admit it, and we'll know we're going wrong there, but we'll just forget about it, and we don't really detail it down. Okay, this is where I'm been going wrong. Not that I didn't do it before, but I just didn't pay attention because I was doing okay, and just fuck it, I don't need it. I became sort of lazy. I became sort of very lazy because the more comfortable you get, the better you do. For me anyway, I got very lazy, and then it took me about one or two big hits. So what am I doing? Even though it didn't end it for me, I mean, hits meaning I shouldn't have taken them. To really hone in on them and make that weakness a strength. That's what I focused on a lot. And so, but basically, I mean, for catching opposite ends, it's basic SR really the way I mark out my ranges, but just in higher time frame. So if it comes to like if I'm shorting the fuck out of it, and it comes to key higher time frame support, well, it's gonna turn around here, whether it's gonna be on the dime or with a bit of a deviation. Have you planned trigger plans ready for that? If it gives you that, then you can exit those shorts and then take the opposite, and then to the next level, and then you can resume shorting. So simple, really, if you think about it, but it's just the execution is all that it takes to make or break somebody.
So really just zooming out, focusing on the key levels on the high time frame, ignoring everything else until it comes time for execution and looking for key triggers there. What are ideal key triggers that you like to look for? Any particular ones which you think people should focus on?
I mean, a trigger on its own is nothing. A pattern is all merit. I mean, I like to look at cross market. Excuse me. So, especially when I'm trading Bitcoin, I always look at what the ES is doing, what the dollar is doing, what gold is doing, what rates are doing, bonds are doing. So if them all before I see if trading Bitcoin alone, okay, especially for day traders, short term traders, that's fine. But for key turning points, I think they're very crucial. Not that I didn't use it before, but I use it in different ways now where I didn't see before. Sometimes some things you only see when you have to see them or when you look into it. Certain nuances, certain things I can't give away, obviously, but yeah, I keep it all piece of the jigsaw. Put it that way. And if they line up with Bitcoin, then that increases the odds of, say, for example, a bear market rally or even a trend continuation play. So even currently now, for example, it's like, I mean, I'm short current days. What is it? 6th of April. I've been short for Bitcoin. I've nearly nailed the high on that. But I've been holding on to it because the other indicators tell me in the sort of lining up so far. Obviously, nothing's 100% bulletproof, but that is an example of where I didn't just short it based on Bitcoin alone. I showed you what I'm seeing on the equities. I'm just what I'm seeing on gold. Gold's a bit weird now, but I think it might be turning. Dollar. So that's an example of it right now where I'm using all pieces of the jigsaw together in confluence, and that determines my risk then. So if it was just Bitcoin alone, then okay, okay, maybe start off small, and then if Bitcoin confirms it by breaking down further on a higher time frame, then okay, I can add more. But when I get all those other factors of confluence line up, then I can put my risk up according to how confident or how probable, should I say, the ID is based on my system and rules.
I see. That's actually fascinating because previously, when we spoke, this cross market correlation was mentioned, but not a key focus of your system. How much are you looking at just the price action on one asset, and how much are you incorporating this? If you were to say 50% cross market correlation, 50% the TA on the asset, what sort of split are we looking at in terms of giving it attention?
I mean, it varies, doesn't it? I mean, if Bitcoin is in a range, then it doesn't matter as much. So it's knowing when to use it and when not to use it. I mean, they're not going to be always 100% together. But usually when it's going to be swing legs, that's where I make most of my money on decent swing moves, not within some sort of range. Because when markets range bound, they can do whatever they want. For example, say when the dollar index or the dollar ranges, some of the FX majors do their own thing. It doesn't mean it's decoupled. It's just range bound. So when it's range bound, that means it's not really going anywhere. So that gives freedom for other stuff to do their own thing. Certain fundamental factors may kick in. But when the dollar trends, then they all bend the knee and they all come back in line. So I wait for those sort of moments where they all come back in line, and those for me are the higher probability plays. So I put most of my risk behind there. Whereas if we're just range bound, for example, intra week on Bitcoin, I don't really need much else because just okay, I've identified okay, everything else is range bound. So that opens the option to okay, Bitcoin doing its own thing, which most of the CT start saying is decoupled, which it hasn't. It's just range bound. That's all it is. And when things start trending, then they all fall into play. So then I'll just play pure TA really, because I'm just playing one end to the other. Liquidity grabs both sides of the market. So it's just identifying okay, which system do I need to use now? What's the context of the environment first? Even right now, it's just short term. So my swing play is there, invalidation's clear, so I leave that alone. I'm not gonna touch that because everything else, when it's ready, as long as the invalidation hasn't been hit, it's a swing play. You gotta let it breathe, and you could just move whenever you want. But then I gotta approach the day trade separately. I may be taking longs short term, which I've taken a couple of longs today, even against my swing. But that's because that's a different system playing. So if that makes sense. So this is just pure TA now because it's just tight range within one day's range, and that's all that matters scalping day trading. But when it starts to break out of this range, then the focus shifts towards okay the other factors.
That's actually really useful. So you look at the US dollar and you also look at gold. And did you mention anything else you like to look at?
Yes, yes, I look at SPX, ES equities. So the old player role, those are the main ones I look. I don't really need to look beyond that. I mean, there are certain other factors I pay, but that's going too deep into it. But just to keep it brief, those are the main markets I look at. And that's what I really
It's
need.
definitely something that I noticed drastically changed my trading is moving away from robotic risk of say, okay, every trade I'm risking 2% no matter what, to fluctuating depending on discretionary factors, correlations, other elements which I can add to my system, especially because I'm obsessed with crypto now. You know, like I've been here for 6 years and I'm very in tune with the ebbs and flows of the market. There's no way I'm not taking advantage of that sort of discretionary edge.
Yeah, absolutely. So yeah, I mean, I don't put the risk I put on my high probability everything lined up for my swing trades. You can't compare that to my day. My day trade is a really small risk, but it's very volatile. So I gotta adjust my risk. I can't keep the small risk. But when everything does line up, I start compounding it hard, and I put my max risk within its limits. You know, not all in. It has limits because through all these years, it's proven to me that those are the high probability trades. So the high probability trades with the high strike rates, it just makes common sense to put a bit more risk behind that. And those that are still valid but lower probability, well, okay, it just makes sense to lower your risk on that. So risk varies. It's not the same for each.
Yeah, 100% discretionary risk, hugely advantageous. Um, okay, so you mentioned earlier that you love bear markets. You're one of the very few people who loves bear markets or does well in bear markets. What's the main reason most people suck in bear markets, even though they can somewhat trade, not just get lucky, but actually trade bull markets?
I think it's just simple, really. They just can't trade both ways. Hodling is easy. I mean, just buy and huddle and up only. But the reason why I like bear markets is because the its price actions are different. It's aggressive, it's fast, it's volatile. That is perfect for my system. I'm able to think quick in that. It's just really fast and aggressive. For example, say in bull markets, you get those pullbacks, deeper pullbacks. In bear markets, it's just one swipe. So I make my P&L quicker. So it's simple as that. Really, I just understand the behavior and the nature better. And I've seen it so many times. I find it easier. Bull markets I like as well. Don't get me wrong. I mean they're nice, but especially altcoin bull markets, those are different. Those are not natural. Those are unnatural movements. That's not normal. But normally in equity, especially the bear market, is just faster and aggressive. Just everybody trying to go for the exit in one go. That ain't gonna end well. So it just gets to my destination quicker. And I can add with it. I can another thing is when I like to compound. So when I compound, I don't take much drawdown against me. It's just quick, quick, quick. I can add and add and add until I can't. And that movement, that one leg I may catch in the bear market, may take a lot longer. Say, for example, just giving an example, say it takes a week for me in a bear market. That probably take months for me in the bull market. That's the difference in how I play my risk and how aggressive it is and how it lines up with my system. That's all really. I mean, we're here to make money. I mean, if the bull market did that, I love the bull market better. Plus, it's good for shit posting as well. Pass the time.
Oh yeah, we're no anyone who follows you is no stranger to how fond you are of passing the time on Twitter. Um, yeah, okay. So, how many systems do you have at this point? Because you've been trading 12 years. How many have you developed? How many do you still use? Like how many are in rotation at one time?
The systems I have. I mean, they all have the same blueprint. Really, it's just the rules and settings change. If you want to put it that way, I mean, the basics are all the same. The foundations of it are all the same. It's not as if I have different. It's just with the swing market or swing trading, change certain things, risk parameters, time frame, stop, how far I'm letting it go against me. Whereas day trading, similar system, I just accept that, okay, I've got to cut it quick, smaller risk. It's the same thing, but just zoomed in. So what I say. So it's the same system, really. Just the version, I don't know, version one, version two. I would just tweak the rules. The rules are different. Similar system, but the rules are different. So if you want to call it a different system, that's fine as well. Or you want to call it a bit altered version.
And are there multiple setups within your system?
Yeah, I don't overcomplicate that much. Otherwise, I'd be like a algo. No, for now I just take what's easy. I don't be more than 2, 3 days at a time. It's reached the point where I just take the easiest setups. Like I'm in that Bitcoin short. While that's unfolding, I've got FX are mainly swing trade nowadays. FX volatility shit, but it is picking up, and I'll be in about 2, 3 FX pairs long term, and then I'll just day trade Ethereum maybe because or something that's really nice or whatever's altcoin is hot at the time. But yeah, my core ones are played, but I can't manage too many because if I manage too many, I make mistakes. So I'm somebody that can only do 2, 3 at a time. Core positions, and the rest is just playing around while they do their thing. And that if they don't require too much of my focus and my risks in place, then I'll take small risks or a legion account and I'll play just to pass the time to prevent me from doing something stupid to the swing trades. It's actually a distraction as well. Other than that, I know I wait and I'll wait as long as I have to. Because at the end of the day, I mean, it's money on the line, serious money on the line.
What does your profit split look like between swing trading and day trading? Which one makes you the bulk of your
I say
returns?
swing trading. I think I make most of my money 4 or 5 times a year. Usually they happen in January time, April, May time. Key shifts in trend is that quarterly, August, September time, and end of the year on occasion. Sometimes those time extend, but most of my swing trades make me money. I'd say 80% of my money is made from those swing legs. That's where I put my foot on the gas. The rest of the year I find a grind. Not that I can't day trade, but you don't need to. You just gotta realize with trading, the less stress possible. Uh, what's the point of putting myself into through all that when there's no need? I know when I'm optimal for making money. I just keep my energy for that. The rest just pastime. It's a grind. Not every day is going to be trading. Trading is knowing your strengths and making the most of it. And if you're not good at something, accept it. That's fine. Do something else or just wait.
Fascinating. So, what percentage of days do you actually day trade? Is that more like most of your money comes from swing trading? You love trading in general, so you may as well be day trading as well.
I actually don't know, to be honest with you. I mean, most these days, I mean, it's just a job. It's difficult. I don't day trade as often as I used to. You get periods of weeks where it's nice for me personally day trading. Then I'll get months nothing. That's what I'm like. Or I just choose not to. Uh, but yeah, it's difficult one to be honest. But I haven't really tracked that lately because I just don't like day trading anymore. So I just sort of put that aside.
Yeah, one of my mates is in prop, and at his firm, it's a pretty big one. And every time he says a trader gets to eight figures, they reach this point where they're like, okay, I don't need to day trade anymore. I'm going to focus on swing trading. When I feel like it, I'll day trade. And they don't tend to size up that much higher because the marginal utility of gains just goes down so much, but the psychological stress remains extremely high. Have you found that at all?
Yeah, I don't need that stress. That's my point. That's why I don't do as much. I find it stressful. There's others out there that I know that do huge size for day trades, but that's their niche. I will day trade if I have to. If I'm bored, I will find something for scalping. But that's just more. I keep that for my DJing accounts, just to pass time, and I don't care if I'm losing on that. I'd rather lose that than my main. Um, that's how I do it. I know I can't stop the way I am. So instead of fighting it, okay, how do I overcome and adapt? And that's what I do. So that's why I don't really gather statistics, because it's just my way of telling myself I'm not serious about it. Otherwise, it's gonna take up time. Whereas I can be improving something else that I really do care about.
Like what?
By improving my swing system, managing my trades, have I missed anything? Keeping up to date with macro stuff. I mean, I just don't talk about macro. I probably know a lot about macro than I let on. Just the bond markets and what they're doing. But it's just I like to do research around the stuff, or I like automating these days. I've got some automated stuff where I'd let that do my day trading for me, so I put very minimal capital behind it, but the amount of churns adds up. So just different ways of same area of what I work in. I just take advantage of that, and certain nuances. I like to pick up on nuances. I find that exciting. I find certain loopholes, should I say, or some algo triggering off at certain times, and it's a pattern. And I say Asian quant, there's some sort of method behind the madness to that as well. Certain times of new, I've noticed Bitcoin sells off, or oil sells off, or this, that, the other, certain times of day, certain part of the month. And sort of just, I don't know, I just love looking at stuff like that. So yeah, and those ones, when I get those, I go all in. Not all in, but like I go big in them because it's nearly a guaranteed trade. But you don't, they change a lot often as well, and I just like chasing that. Who's next? But that's just, again, passing my time in a way where it's more, productive, rather than just wasting my time looking at a chart doing the same thing, no different result.
That's actually one of my favorite ways to optimize systems. Just turbo laser focus on one statistic and try and find an edge, whatever it is, time a day, time a month, certain seasons, specific levels of
I can tell
volatility.
you're a mathematician just from the way you speak. Got similar backgrounds.
Well, it was funny, bro. Before I'd ever come across your content, I was using the word deviation. Why? Just it's the
Yeah,
mathematical term.
yeah,
What else would you call it?
it's just deviation, and then now it's just the whole CTs, the word deviation now.
I probably don't even know what deviation means.
Just made it up.
Yeah, sounds fancy. SC uses it, probably make me money. Um, do you have because you are a mathematician, but at the same time, you're not overly focusing on the stuff that doesn't make you money, like the day trading, you're doing it, but you're not overly focusing on the statistics and edge there. The swing trading is where your money's coming from. What are your key KPIs that you're looking at? Surely, I imagine, but at this point, you've simplified them down to just a few key ones that matter the most.
I mean, no, I'm really simple. I just take what's working for me, and I don't like to overcomplicate it. I found after all these years, just keep it down to the most simplistic. Even a simple moving average system. If you focus on when it doesn't work and when it does work only, those two factors, ignore everything else. That alone is such a powerful system. Some of you'd be surprised. Some of my automated systems are based just purely off that, or some of my big swing trades. I You see me pull out that is a cold Lego indicator thing. It looks like some moving average band or something. That's something alone I've refined in such a way where it works for me. It's so powerful for me, honestly. It's one of the key things for my compounding. I don't. It's used certain times I can't use it, but when in the middle of a leg, that's probably the most powerful tool. Something simple. You can call it a moving average if you like for my compound, and that's it. I don't complicate. I don't go into the why is this that the other. I don't need to. If I don't need to know something, I don't need to. Somebody else can do the maths behind it, or the explanation behind it. All I need to know is this tool for me works in this situation, and that's it. And as long as that's working, I don't need to go into the detail.
So you don't care too much about the win rate, the expectancy, the
I mean,
average
the win
risk
rate and stuff.
reward.
Okay, that comes with it. Obviously, I'm not going to use it. That is basics that I think we should all note down. I mean, that goes without saying. So I assumed that
You'd
just
be
goes without
surprised.
saying. I mean, that's something that should go without saying, without even mentioning. But yes, obviously, it has to be proven after forward tested. Um, but yeah, after all of that's done, which I'm assuming everybody does that anyway, um, then I use that as a factor of confluence actually. So I'll have one trigger, then I look at, okay, does my other method give me a trigger here as well? If one or two other methods give me a trigger at the same time, there's my max risk goes on there. But if it's just one and I'm not confident, I'll have his gut feel as well. But that gut feel comes from time and experience. It's not really a gut feel. It's a gut feel based on proof and evidence. If that makes sense.
100%. And like proof, evidence, experience, the stings of money losses, the emotions which come behind, and pattern recognition, of course. Um, I see. As someone who's scaled up to trading millions or has the potential to trade many millions, have you found an ideal portfolio size that you're really happy and you don't feel the need to trade more than?
Well, simple as I know. Just trade, keep going, full throttle.
Yeah.
That's it. I'm that. That's where how much I don't care about risk. I sometimes you gotta be a bit nutty to make it big. Yeah, I don't, because then you get too cautious. With me, I don't. I just do what I do, and that's it. I don't think about it. I just carry on, and that's it. I know I estimate how much. For example, if I'm risking 1% of an equity, what is that? Is that whole net worth? Is that just a trading size account? I've got an estimate of how much I do that, but I just keep going, and as the account grows, just keep going and going. That's it. I don't think about that. I purposely don't,
You
because it
just
will
love
get
the
to me
game?
then. The more I think about it, I don't look at my P&L. I just trade it, and that's it. That's all literally all I do. Because then my attitude is different. And then I'm thinking, oh, that's a bigger position. That P&L must be here. Before I know it, I fucked up the trade, overthinking that, and that's it.
Fascinating, man. So there's no real goal. You just want to keep trading. You love the game, and you,
Yeah, that's all. It's all I know, really. So, yeah. So why change? Do as long as I can until I'm physically impossible to.
dude, I love that. It's you've definitely found a passion, an obsession. That was actually one of our main talking points on the first one.
It is it's an unhealthy obsession, I know. But getting more of a balance now, sort of,
Sort of.
if you call that balance. But yeah,
Well, if you have more about what does your typical day look like these days? All I see outside of charts and pissing off Matic holders from you is you driving your Lambo. What do you do day to day?
I just drive. I like racing. I just drive when I want. It's like a sort of a cool off or relax. I mean, it's like a spaceship. But yeah, it's not Islam. I've got a few others. But yeah, it's just mainly just trading, and then I fit that around when I want. I like horse riding. I like traveling more now, so I've got a few places around the world now. So I'm doing that more now. But I never switch off from the market. I probably trade more from there off my phone than I do. It's weird the way it works, but it's like it's my mind's mentally accepted that it's a more relaxed environment. I naturally just tend to relax for some reason. But yeah, yeah, just trade. Just wake up straight to the charts. When I look at the time again, it's evening, still at the charts. Oh, okay, let me go take a break now, take a drive, or do whatever, and that's it. Go eat somewhere. But yeah, you gotta live
So
and breathe.
wake up, charts, skip the breakfast, maybe eat in the evening if you feel like it.
Yep, absolutely, that's it.
Damn, bro, that's yeah, it's clearly working for you. I've I don't know if I'm not religious with the food and getting out the house, like getting some sunlight in or something, I just get really anxious and bad with just taking stupid positions, doing stuff I should not be doing.
That's good. If I wasn't so zoned in, I'd probably get like that as well. But when I get zoned in, I'm zoned the fuck in, and that's what probably takes it away. But it's had some effects on my health, which I'm trying to improve now. Um, but yeah, if I wasn't so zoned in or really like obsessed with it, I'd probably be the same. But yeah, I'm trying to change things, but it's just taking me longer than I would like. But yeah, I mean, it's unhealthy to be honest. Carrying on so long, it's probably because I'm young enough to keep it up, but there's only so long I can keep doing it before I realize that now because I'm feeling it. Yeah.
What do you mean you're feeling it? If you don't mind me
I
asking.
mean, I can just tell the health problems I've been getting from it. Lack of sleep. The sleep alone, that one thing, so powerful. I'm going to appreciate it now. Before I could go days, so sometimes I go 5 6 days, and it's like I can go 3 days without sleep. It's like 1 day for somebody. I feel normal. Now that 3 days is hitting me now. Whereas before it wouldn't. So probably old age now kicking in.
Hey man, it's it's clearly something you're loving. So and you got it under well, you're aware of it, so maybe it'll get
First step, yeah.
yeah, first step for sure. So one other thing I wanted to ask was um, ranging and trending markets. Do you not touch ranging markets, and do you mainly focus on trending markets?
Well, it depends what our range is. If I zoomed out on the daily or weekly, that could be a weekly range. Zoomed in, that could look, and then when I trade it, it could be enough for a swing trade from one end of the range to the other. Whereas a day trade range is different, so it depends on the time frame as well. So I'm treating Bitcoin as a range actually right now, but I'm getting a swing trade out of it. That's why it's the mentality, isn't it? If I see it as a range, for some reason I see easier to comprehend. It's just one end to the other, but that one end from 15k, just say to 20k, that's a 10k move. Or however long, where you whatever 8, 5, 10k move, whatever your range low is. That's a swing trade. If you see it like that, then it's easier for me also to take the other side. Well, okay, but if it gets to the extreme end of the range, then probability wise, range bound to prove otherwise. I mean, I can short the other end, and I know when I'm wrong quick, cut, flip. So that's where it enables me to flip quick because based on validation, if I'm wrong, I'm not just going to sit there. I have already planned what I'm going to do if I'm wrong. So that enables me to flip the opposite direction quick. So I treat everything as a range unless it's a obvious range, a trend. But even then, everything's still some sort of range, isn't it? Where there's a weekly time frame, if you break it down, that's a range. Whereas one my guy might see as a big trend. But that mentality of thinking of it like that makes you start thinking stuff that is unrealistic. Whereas okay, even if it is a weekly range, let me say, hang on, there's a boundary there, mid range, etc. Then it makes you able to say, okay, I gotta be cautious here, gotta remove the hopium. Because when I was long in it, uh, um, even I wanted 25k at the when it was 15, 16k, but I got out around 20, no, 18k. I got out a bit early, but I got back in. Then I said, I'm gonna make 25k range high. And even though if I wanted it to go a lot higher, and I got out, flipped short, and then above 20k, I gotta get out at 28k now. Even though when you're long and fully in position, you want to go to 40k, but you can be realistic, and then it came down. So I always keep the reason why I do that is because just to keep me in check and let's not get too overexcited. I'll get excited at the moment, but then I step back and say, okay, that's enough hopium or whatever you want to call it, dopamine done. What's the market really telling me now? Market's actually telling me to get the fuck out and switch. That's what I did. That's what I do, and that's it.
Yeah, I'm looking at it very differently, purely just like structural. I'm looking for those structural shift moments, but for you, that's extremities of range, the way you're looking at it. And what I found really interesting was the fact that, yeah, and you've said this a few times throughout this, that you like to flip quickly and take the other side of the trade. Now, is that with most your positions? Like, if you're wrong and invalidated, you normally have another trade waiting to come in and take its place?
Yep. So if it comes to range lows and it gives me a trigger for a long, that means get out my shorts and flip long. Because even if I do take the long and it's short lived, then if the long is invalidated and gets to the extreme end, so what I'm flipping guys at the extreme ends a lot, mid range as well, but it's the same concept. Mid range can be treated as a short term range low or short term range high, whatever side of the range you're coming off of. But say let's talk on extreme ends. So if I do take get out the shorts and it gives me a long trigger, I'll take the long, assuming it's just going to be ping pong. That's a hard thing to do because that removes, oh, I really want to go to 10k, 5k, whatever. But hang on a minute, I always tell myself, okay, if you're wrong, break of the range lows mean that's a break of the range means a new expansion coming along. So okay, why don't I just get back in? So that sort of makes me realize, hang on, that's easy then, isn't it? Get out. If he wants to continue your way, you know how to get back in, and that's it. Just telling yourself that how to get back in, plan to get back in, removes the need for holding on to something that's unrealistic. And that's how simple I keep it. When I said I keep it all the way, came back to simplicity. That's what I mean by that. Simple stuff like that. Plan to get back in.
Okay. Um, So, Essie, when it comes to managing a position after you've entered, so I've got a good understanding of how you like to split it, range extremities. If one is wrong, the next play likes to present itself, normally at invalidation. How do you manage things like your swing trades that last multiple days or multiple weeks?
I mean, if it's the early stages, I mean, for this swing trade, I mean, nothing right now. Just leave it as it is. Nothing's There's no reason to exit. And when it starts breaking down, say it breaks out of this range, then what the way I manage it then is new invalidation. And as long as the trade ID is valid, not hit the target, I think, then I can reduce the risk. Say I'm risking 1% of the capital, then say I've reduced it to, I don't know, my stop, so it's only risking 0.2%. By default, I can add that 0.8% on because it's giving me a new range and it shouldn't come back within, so new invalidation. I'll add that on and I'll keep doing the same thing. A structure breaks down, consolidate, breaks out of the range, new invalidation. I'll keep doing that till my target gets hit or I've got a reason to exit. And that's how I manage it. That's it. Nothing else.
I love how simple it is and clear. Um, okay, awesome. Essie, we've gone through every question I had for you, except the final one, which is your goals yearly. Do you have any sort of percentage goal that you like to set for yourself to accomplish yearly, or it just completely
No, I
depends?
don't set myself because that adds extra stress for me personally. Why would I? I mean, at the end of the day, is it going to change anything if I had a goal? Think about it. If anybody thinks about it, you're going to take what the market gives you anyway, and you're going to do your best. So that's going to happen regardless, whatever you get. So me setting myself a goal, and if I don't reach it or whatever, it adds that extra stress. So does it make a difference for me to add a goal? Not really. I'm still going to do the same thing, but it adds stress though, doesn't it? Whereas it's an extra thing to think about. So you sort of like chasing that goal, the way my mind thinks anyway. So I say, okay, no, I'll just get whatever I want, and I'll do well regardless. I'm at a stage where it doesn't really matter now. But even then, even if you're a small account, I think personally, it just adds. You're just gonna take what the market gives you, regardless. Just because you set a goal doesn't mean market's gonna say, okay, I'm gonna give you that goal. You know what I mean? So I find extra stress, and I don't believe in that setting goals. But when it comes to trading, anyway, there's goals in improving, but as for results and how much you can milk at the market, I think it's a barrier gets in the way.
Two biggest themes I've picked out throughout this entire conversation. Focusing on simplicity, which is something I've been incorporating a lot recently, but one I haven't quite given as much thought to, and maybe it's because you have so much experience, is the stress mitigation. So many of your decisions seem to be how do I minimize stress and take out useless mental processing from the system.
Yeah, but I mean, think about it, it's just life, isn't it? I mean, you just focus on what you can control. I just focus on what is in my control, my risk, and discipline, keeping that discipline. But outside of that, I've got no control of the market, what it wants to do. I could be completely wrong on these trade ideas. I'll still carry on the ship posting as if, fuck it. But I know whatever happens, it's not the end of the world. It's just one trade. And if it's just one trade, then there's going to be another one. But if you're dependent on that trade and you've over risked, that's where overthinking and marrying the idea and putting too much into it, like then you start convincing yourself of other things when it's not. No, I'm gonna make that. That wasn't in the initial idea when I first took the trade. Why is it there now? And if you think about it, there's no real reason. It's just emotional reasons you brought in and hype from others to support your idea, as if the hype's more important than actual rational thinking and reasoning. So I'll get stopped out. Okay, next trade. I may end up flipping long, and I'll take the piss out of bears then at that point. But yeah, that's for another time.
SC, thank you so much for your time, man. This has been an absolute pleasure. It always is. Maybe in a year or two, I'll reach back out again, man. Is there anything you'd like to leave listeners with or share? I'll let them know where to find you in the description below, of course. But yeah, feel free.
Just I said, just keep it simple, keep it disciplined. Journal. That's where you learn a lot. And yeah, that's it. I mean, I've got my Twitter there, but I don't know if I reply or not. But yeah, it's just my Twitter handle, really.
Okay, perfect, man.